We are live with Bud White from GoGoPool. I'm thrilled to have you here. Sorry, let me give you a proper introduction. Bud is actually a cryptographer, which is not like crypto, which is a different thing. But he's been in cryptography since 2009 and blockchain since 2016. Expert in private blockchains, tokenization, regulation, exchanges, and decentralization of layer ones. Happy to have you aboard. You were recently hired at GoGoPool 4 months ago, so happy to hear about what you're all are working on, and let's chat decentralization of Avalanche layer ones.
Yeah, let's do it. No, I'm super happy to be here. Happy to be in the Avalanche ecosystem. I had spent most of my career launching private blockchains and then applications like tokenization of real world assets on Ethereum and Ethereum-based chains.
I'm so sorry to
Um,
hear that.
yeah, but no, it's funny. Not many people clue into like I started with cryptography before getting into cryptocurrency, and I remember joining Digital Asset in 2016 and going to conferences like the ones here in New York, and the conversations at the conferences were, how does it work? Bitcoin, but how does it work? And fast forward to today, no one cares how it works. They care about what can you do with it,
Yeah.
right? And that's what we're talking about today. We're talking about Avalanche and their quest to tokenize all assets out there in the world and to bring the barrier to entry to launching an L1 down to almost nothing, so that L2s that want to get into the space can just launch and grow.
Yep. Amen. So what can you share with us at GoGoPool? What would you like to
Sure.
go over?
Yeah. Well, so I think the biggest question I've been getting from project teams and investors and GGP holders is, we know you for mini pools, right? We know you for the liquid staking protocol, for the GGAVAX, and for reducing the minimum stake requirement to actually run a hardware validator and stake. And that has been a really good business for us. We have 230 something validators on any given day running. That's usually somewhere between 15 and 20% of all the Avalanche validators. But we know with the Avalanche 9000 announcement that there's a huge push towards launching more Avalanche L1s, and more specifically, making the L1s that have launched already on mainnet, and then this new cohort that will be incentivized to launch permissionless. And that's kind of where what we do today goes to where Avalanche is going, is that whole permissionlessness. Because it's a really hard problem to solve. If we think about the blockchains, the OG blockchains, they took a lot of time to grow while there were still low stakes. When Bitcoin was pennies and people were running validators on or miners on their laptops, it took a long time to grow before there was all of this value in the market and people were doing high value actions on the back of a blockchain that had a lot of value tied up in it. The problem we're going to start seeing is that not only are these high value DeFi projects or high value NFT projects where people really want to take their value and lock it into the ecosystem, we're going to see a bunch of projects that might not have that community set up at the very beginning, but will still want to have a permissionless blockchain as the back end to the business or the product that they're trying to build. And if there isn't this huge community activation, how do you get people that want to run the hardware and lock up the stable token, the AVAX, the native token of that chain, or whatever it may be, to bring that financial security to the chain, so that you're not going to get somebody come in 51% attack and steal your business?
Understood. And when the co-founders of Avalanche, Goon always talked about the importance of taking down the gatekeepers, and he was an early Bitcoin miner, and many people were, or early ETH miners, and you could just do it on your laptop, and now that's just not what Bitcoin is now. But that's what Avalanche is now. So it's interesting to see that They're trying to make it way more accessible for normal people to be a part of the network and to own the means of production. Um, so yeah, I'm happy to see that Gogopool is helping that out. Maybe you want to talk about how what the future looks like after this network upgrade, if you can.
Yeah, for sure. So I can't give any demos today. We're going to be doing live demos at Avalanche Summit in 2 weeks. But we're really attacking this problem from two sides. One is from the perspective of a user who wants to launch a blockchain. And the other one is from the perspective of a user who wants to interact with that blockchain. And we're lumping in a lot of the workflows, such as setting up a validator and staking asset on that chain. So we're calling the two products L1 Launcher and L1 Marketplace. L1 Launcher is very similar to some of the tools that we have today, like Ava Cloud. Going in, launching your own private DevNet, being able to play around with a vanilla EVM, setting some parameters, setting a token, airdropping it to yourself, and like interacting at the very basic level, almost the exploratory level with what it means to launch your own blockchain and manage that blockchain. And then Ava Cloud gives you a really good upgrade opportunity where you can promote it up to Fuji and have your actual testnet live and running with one or two or a handful of validators with the package that they have, and then be able to run a permissioned blockchain. We want to take where the handoff is there and move it towards permissionlessness. So a couple of things need to happen. One is you need to be able to allow any validator who wants to run to connect to the network, which today is usually turned off by the L1s and the subnets that have launched so far. And two, you need to be able to solicit to the validators what they're going to get and what you're going to give. So the L1 launcher is very much an admin tool for launching your VM, getting it registered to pChain, getting the token out there, but then also being able to have the tools to incentivize these validators to run. So we've heard a lot in the L2 space over the summer with these node sales taking place. I believe that's going to be a pattern we're going to see within Avalanche in 2025. And namely because the nodes that we have here in Avalanche do real things. The node licenses that have been sold with some of these big L2 projects were really just virtual node licenses where if you were holding this NFT, it granted you the right to receive rewards. You perhaps didn't actually need to run software on a machine that was fact checking a L2 process or a roll up or whatever it may be. But in Avalanche, we have a really good system for doing one-click hardware launching or being able to delegate on the back of hardware that's already being run, either some of the mega servers that are out there or any number of the, I think, 1,000, 1,200, I forget how many validators are out there right now, but this idea for blockchains to be able to launch and then provide gated access and eventually open access is an entire set of workflows that is going to need to be thought out. So the first way we're contributing to the ecosystem is to give builders those tools. And then the second way is what I said before, the L1 marketplace. So for all of those builders that are going out there and getting grant money to launch these incentivized test nets, where are you going to spend your testnet money, your grant money? And a lot of it is going to be incentivizing people who are already running hardware to be able to point that hardware at your L1. So we've built a marketplace that aggregates all existing data for mainnet L1s and Fuji L1s, and a lot of the Web3 tooling that is going to be needed to tie into that, whether that's one-click validator swapping to be able to bring a validator from C-Chain over to one of these, I keep trying to not say subnet, one of these Avalanche L1s, which I won't get into the technicals because we both know with ACP77 it's not that simple. But when I say it, I mean in the broader sense, somebody who is already actively running 1, 5, 10 nodes on the Avalanche ecosystem, to be able to give them tooling to do single or batch movement into this new Avalanche L1 ecosystem, and be able to manage where they're allocating their hardware, like their actual physical servers, as well as how they're allocating their value that they're staking to bring financial security to these chains.
Do you want to highlight some of the existing layer ones that you're working with?
I don't think I could say that in public just yet.
Okay.
But I mean, I know you know a number of the projects that we've been working with.
I do, but
And
permission is not permissionless here.
yes, that's true. So I would say the types of companies we're working with fall into two categories. The first of which are there's 46 like mainnet L1s that are registered to P-Chain today, or 43.
Yeah, and there's like
But
1,300 in testnet, right? Something massive.
more, I think it's like 3,100.
Wow.
It's if you search by even those that don't have a single validator running today, then it's massive. I think if you just look at the Fuji testnets that have validators, it's somewhere in the hundreds. But there are a lot of teams that are out there trying to figure out how does this technology fit into their business stack. And like I was saying before, the groups that we work with fall into two categories. The first, the ones that you already know, that are running businesses that have blockchains that are minting blocks, like as we speak, who are trying to think about how do I move from being a permissioned product, like a mainnet product, to a permissionless product. And the scary part for business owners in that genre is that we feel regulation coming. Here in the United States, the Blockchain Association, which is the pro-crypto lobbyist group, is working with policymakers to draft, I believe it's called FIT 21, the name of the bill. And there's very clear requirements for what makes a project decentralized. And again, we want projects to be sufficiently decentralized so that if the SEC was to put scrutiny on that project, that we could tie into prior cases that talked about decentralization being a means for a token not being a security. So there's all of this emphasis around what is decentralized. And at least in the draft bill, what we're seeing is that the founding team holds no more than 20% of the token, or I believe it's no one person or entity holds no more than 20% of the token, and the founding team has no more than 20% of the validators. And that becomes a very hard problem in any project, because I don't think there have been very many projects to date that haven't had more than 20% of the asset in a foundation as a single entity, or that the founding team is holding on to that. And then when you try to build a community around a project, we have always in the I would say the fundraising through crypto crowd thought about community right before you do an ICO, where you're putting together a Discord server, you're trying to incentivize people to understand what the project's about, do a bunch of things to gain levels into a point where they get on a whitelist, so they're the first to mint, or the ones that get access to the token at the lowest price. And then that's kind of it, right? Like once the transaction takes place, that community kind of fizzles out. But what we're talking is building community that continues to support the project along the way, right? So it's almost like you're building a community where the start line is when they get access to the token or a node operating license, rather than that being the finish line, and bringing them in so that they are not only net supporters of your project, but they are taking that asset, staking it, and running a validator so that they are financially incentivized. They're locked up in a way because you're paying them yield. And from a definition of what constitutes a utility token, you're meeting almost all of the guidance. Well, I shouldn't say guidance. We're meeting almost all of the understood expectations from the SEC on what is a utility token.
And your previous experience with tokenization, do you want to go over any of those projects and how that influenced what you're up to right now?
That's a really good place to go. When I got into cryptocurrency and distributed ledgers and blockchain, I was working for a company called Digital Asset Holdings, who had the contract to tokenize the registry of securities with the Australian Stock Exchange. So this isn't like, today you're holding, bank, like some bank's stock in your brokerage account, and that's going to move to a crypto token. So all of the trading and putting orders up on an order book and the order matching was all done with the traditional system. And then the settlement side of it was to be done on a private blockchain. And that was a really good exercise of understanding how to take a asset that already exists. In our case, we were tokenizing it on a chain that was purpose built to do that. Then also tokenizing the Australian dollar and being able to ingest large number of trades, net settle them, and be able to send out blocks and transactions to each of the trading participants to really show what your end of day total was with any two traders, which sounds very simple, and that the API and data feeds that we have today should be reasonably good at coming up with these end of day totals, but they're not. The traditional financial system spends a lot. I think it's 55% of a trading firm's headcount is spent doing back office reconciliation. So all that to say, I started my career tokenizing real world assets and had continued that after I left Digital Asset to start my first company. Now,
Did you guys succeed in that effort to tokenize those assets on the stock exchange?
We did, yeah. So
Is it launched?
that's a very good question, and it's not the answer you're looking for. The project went complete, I believe, 3 or 4 years ago, and I think there was 12 or 24 months of settlement shadowing, where it was running and taking in all the trades and just operating in the background, but was the secondary system instead of the primary system. And then due to restructuring in the leadership, the project got put on a shelf. So unfortunately, we cannot say that there is a securities market that is being run with blockchain, but there are a lot of projects that have been built on the back of that, even with Digital Asset and their private blockchain, that have tokenized the registry of something and launched a business around it. I can't recall the exact projects, but I believe in Hong Kong, there was a project where they were taking, I think it was like US T-bills and tokenizing them, and then all of the Hong Kong exchange trades of that asset were cleared that way. But capital markets isn't ready yet to tokenize at a large scale.
So
but oh, go ahead.
We were just talking with Millicent and Secret Network, and Millicent is part of the UK financial sandbox, and they're working with some larger financial players. So and he sort of agrees. Kenny sort of agreed with what you just said there, that the appetite is starting, but he said banks always like to be first to be fifth.
Yeah.
And that's sort of the opinion there.
Well, I'll make two strong points relating this back to Avalanche. So the first one was prior to joining GoGoPool, I hadn't spent any time in the Avalanche ecosystem. But what I knew really well is how the banks have been doing their proof of concepts with all of these products. Like when JP Morgan did their original fork of Ethereum and built out that chain, which I think was called Quorum or Quorum.
It's called Quora. Quorum.
Quorum. And I remember working with that team when they were building it, and it was a huge success because they successfully tokenized end-to-end a mortgage-backed security within JP Morgan walls, and all of the consumers of that were other subsidiaries of JP Morgan elsewhere. So they couldn't really bring in, like Bank of America to purchase that security because, they were running the blockchain, they ran all the validators. And if you were Bank of America, why would you ever trust a blockchain that isn't sufficiently decentralized? So
But then
the alert,
they shut the project down after like 4 years.
they shut it down, and I think it's because of two things. One was that it would be very difficult for them to get approval to run a chain amongst peers, which is ironic because the DTCC, which
Yeah,
clears all fixed
that's right.
income, is
That's right.
an organization of the 20 biggest banks.
Yeah,
So they
and
already do
totally,
it.
and they set these internal rates, at which the rate at which they risk banks lending money to each other. Yeah, but it's an internal. It's like a private network.
Yeah. So the first problem was, like I was saying, you can't get another bank to be your customer if that bank isn't participating in the validating. And the second problem was every bank that did a proof of concept with a private blockchain did it on their own technology for their own internal reasons. We used to call it paid tourism.
Yeah,
Like, hey, we just want a proof of concept for $3 million to go build out this project for a bank. Well, really what they were doing is like they were paying for you to educate them on what they could do.
yeah,
And because every bank was building something different, there was no interoperability.
yep,
And that's what really got me excited about Avalanche was the Avalanche subnet technology, the Avalanche L1 technology says that you can launch a blockchain and I can launch a blockchain and the bank can launch a blockchain and this video game company can launch a blockchain. And the Avalanche protocol coordinates the movement of the assets between the chains.
that's right.
So if GoGoPool can take the mini pool cohort and start pushing them to validate all of this cascade of all these chains out there, then the asset interoperability is already solved, then we can actually get real network effect from companies launching blockchains. Like the closest we've seen to network effect in crypto so far has been DeFi projects on Ethereum creating these recipe workflows where you can take an asset here, pull it out of here, put it over here, do a flash loan and kind of get like network effect and interoperability between like smart contract sets. But now what we're talking about doing is through different blockchains. So when I think of how do banks win 5 years from now or 10 years from now, it has to be with a technology like Avalanche, where they can all work together to build these recipes of I have an asset that was issued by JP Morgan, and then Bank of America is going to give me a loan against it, just like we see today with real world assets.
It's funny. I direct viewers to the traditional merging TradFi talk with Millicent and Secret, but we use all these buzzwords and terms, but this is just a triple entry accounting ledger, right? It's like my ledger, your ledger, and the public ledger, and like everything gets so lost in that for so long. You know, we're just talking like about like we're just talking around and around and around about the issue, which is just like, can we trust each other's ledgers?
Yeah. But back to your original question, there was a second point I wanted to kind of talk about as it pertains to tokenization and what I've done in my career. So in the early days of, I guess, like the real world asset part of the industry, I ran a business where I built some IP around tokenizing assets, and then I partnered with a New York-based startup that was doing payday lending to streamers, like Twitch streamers and YouTube. Actually, YouTube wasn't even up and running in the streaming segment. I think it was Spotify as well. And this founder I partnered with had really good data coming from Spotify and Twitch in terms of if a a user was getting so many views in so many countries. He knew the cost per view and could like back into within like a very tight tolerance how much the paycheck was going to be when that entertainer got paid, usually 60 days later. So with the tokenization work I did, I partnered with this guy and we created a company called Paperchain, and we were buying up debt with like a set number of artists and streamers, putting it in a legal entity, and then tokenizing that using centrifuge.io. Back in the early days, we were one of the first projects to launch in Centrifuge.
Yeah. And so for people who don't know, Centrifuge is a Polkadot parachain, right? That is partnered with
Yeah.
a friend of mine is a lawyer on this, and he'll kill me. But Centrifuge is a Polkadot parachain that is partnered with other real world asset providers to originate loans.
Yep. Yeah, I think like the majority of the projects that I remember seeing go through the launch process with them were things like freight forwarders
Yeah.
who need to have a bunch of money up front in order to take real goods in order to ship them to the next country or the next node in the shipping chain to be able to get paid for that. So it was a very capital intensive business, and they were paying really good yield. Even with the Spotify streaming, like we were paying 12% or 11% APY for a very real asset-backed token, and they matured every 30 days or every 30 to 60 days. So, you know, going back to regulation, right, and tokenization, we were we knew that we were launching securities, right? These were Form D, Reg D, unregistered securities, which have certain parameters, such as only being able to raise so much and only being able to raise from certain people, like non-US people and accredited investors. And once the business grew to the size that we did that maximum, that ceiling, we had to close the business down. And you know, we wrote to the SEC trying to get guidance on you know what to do from here, because there's very clear guidance on how to fill out paperwork and make known an unregistered security. But beyond that, we had our hands tied. And we had users that wanted this thing. We were using technology like Centrifuge to be able to do the assets. And it comes down to just trying to be, I guess, ahead of regulation as it comes, or at least trying to design for it. And you know that's what we're doing at Gogolpool right now, right? We're looking at our strengths and what we have and where we think not only the market's going to go with the technology, but where the market's going to go with regulation.
Well, everyone's trying to figure that out in terms of the entire market. I think you can look at the sideways price action as a vote of no confidence in any direction. So we hope, you know, as I said, like it's just a triple entry accounting ledger. Like it's sad that our SEC has not given that to even our publicly traded companies, and that's
Yeah.
just a horrible way to regulate and innovate. Um, but like specifically, so you guys built this centrifuge project, and then had to take it down because it was too successful, essentially, and that it would go over the stated jurisdictional and reporting requirements of Reg D.
Mhm.
So did the chain just shut down? Like what happened to the project?
Yeah, the project, we pivoted into doing other financial services for creators. That was the era of neobanks and kind of neobanks that were custom tailored to certain needs and genres. So I ended up leaving the project and joining a exchange, but the founder that started off in the music space continued running that business for another few years before I think eventually shutting it down.
Wow, amazing. So yeah, you've had a ton of experience, man. Like, so you helped build a tokenized securities platform for the Australian stock
Se-
exchange.
yeah, securities exchange, but it's just stocks.
Yeah.
Yeah.
So, and the ANZ bank is running some sort of private Avalanche layer 1 now, right?
I actually don't know that. I have the hat. I have the Evergreen hat. Um, but I'm not familiar with the projects Evergreen has sold
Yeah, one
to.
of them is ANZ.
Okay, I didn't know that.
I mean, I know they're. I'm in New Zealand, so I keep track of these little known facts about this section of the world. But yeah, so that they're coming back into the fold. What? How do you imagine? Honest question. How do you imagine these institutions interacting with something like GoGoPool?
Yeah, so I think there's a couple of low hanging fruit there. Um, so the first of which is I don't know if a bank chain, even an Avalanche bank chain, can ever be fully permissionless. It's too risky for them to have um, somebody from a sanctioned company or somebody with marked currency from um, some sort of wrongdoing to be able to come in and validate or do something in the system. So
This is called counterparty risk for those keeping track at home.
yeah, yeah. So uh, there's going there already is by default a level of KYC or AML, like know your customer, anti-money laundering, that's done by de facto with the way that Avalanche L1s are launched today, because there's a switch turned on that says seek permission before launching validator, right? And the admin wallet for every chain, very annoyingly, gets pinged every time somebody requests to validate, and they can go through and do their own KYC on the back end, or at least validate. So, um, not something immediately in the roadmap, but a direction that is very possible as we start working with institutional clients is within this L1 launcher we've built, which is acting like an admin console for these chains, is to build in or partner with a KYC company to be able to build out a way where a bank chain can, I guess, groom the validators that are coming through and be able to go through the right checks that they need to have to make sure. As I stated before, I think it's very, very important for banks to have validators that aren't themselves. And I would argue that
And
any
why?
bank chain, well, because how are you going to do business with somebody who can 51% attack you? Why would you ever buy anything of value or transfer, let's say, USD into an account for a digital asset where the person you're purchasing from has more than 50% of the network and can essentially undo the trade? And I mean, there's no security in that. Like, there needs to be sufficient decentralization, even if it's like going back to, we talked about the DTC, right? I forget the acronym, but it's the
Depository
clearing,
Trade Commission, Clearing
right?
Commission. Yeah.
Right. And that was already an example of, was it 12 or 20 of the biggest banks in America, um, all put up some collateral and manage this clearinghouse. So they already kind of essentially have a 20 node blockchain, right? Like in the crudest fashion,
Totally.
right? It's a ledger. They're all responsible for keeping that ledger clean, and they can all pull the data out of that ledger. Kind of, a like paper and pencil blockchain. So it already exists, but nobody wants to take that risk again in building a bank chain, where each one of those participants had at most 5% of the validating power in that market. So I'd advocate for bringing that back. I'd advocate for ANZ doing an Avalanche chain and partnering with a company that's going to be able to point either institutional grade validators that are agnostic, or validators that are known to be run by the counterparties they want to do business with. And that's where digital asset, in my opinion, had the wrong architecture. Because when we built the clearing system for the Australian Securities Exchange, it was a hub and spoke model. The only node that could write was the trusted central counterparty of the ASX, and every trading participant would just submit trades and then validate that the trade that was written is what they submitted.
So it was
right? And
federated, basically.
it was federated. So I would like to see more of like an oligopoly of validators uh, in these high trust, high risk ecosystems.
Great, good, very good point. But like, do you think that these banks are going to want to deal with, like, is GoGoPool going to have permission validators somehow,
I think
or KYC sections of GoGoPool?
KYC, I think, is what it comes down to. But I'm not sure what is going to constitute the right entity to run these validators. Like I said, it could either be institutional grade. Like we know in the ecosystem that there are many of these businesses who are only exist, right? Like you're very well versed in this area. You know, are those the right types to be running bank validators, bank chain validators?
I think if they would be, if they could get served. As
Yeah,
long as that
yeah,
bank could serve somebody, they'd be just fine.
yeah. So yeah, I definitely see
Honestly,
a
I
lot of
would
overlap.
love to. Speaking from myself, like I've been validating since 2020, and I would love to validate like any particular jurisdiction in their compliance side, whatever, insert security here. We'd love to do that. And I would love to like have Fireblocks and BitGo custody while we validate. Like that's a no-brainer.
That's a whole separate problem of custodial validating.
Oh well,
I'd
yeah,
like
but
to see solved.
you guys have got to. I've been hammering the GoGoPool team on this for a while, and I cannot stress like you really need to have custodial validators.
I am 100% with you,
Yeah,
and I think that like the Avalanche L1s are an opportunity to go down and start these conversations again with
yeah,
the custodians,
for sure. Because
because
dude, these making like the title of the talk is making L1s permissionless. They won't be permissionless unless we can have good custody, because it just people just can't
yeah,
take the private key risk. They don't I don't
it's
wanna stay up at night and, having, paranoid fever dreams about what's going on with their private key. They want it all
yeah.
insured and know they can sleep well.
And you know, I've spoke to a lot of institutional token holders, like venture capital token holders,
Yep.
and you know there are VCs out there that who like us, right? Who are running mini pools. I can't name names, but like you know, there's a very specific way that they do it, and a lot of these venture capital firms have, um, uh, you know, like seed round type funds, but they also have liquid funds. And the liquid funds, if they're parking a big chunk of value in, you know, AVAX or in ETH, you know, their mandate is to put it in a custodian, because that's what they did with traditional
Of
assets.
course, dude.
They park it in Boni or JP,
Yep.
and the the yield that they could get, right, the 5 or 6% that you can get on AVAX right now, is nothing compared to what they would get be penalized for losing client money.
Exactly,
So
dude.
I think I think, and now I'm sharing like a very internal line of thinking, but we think of staking the way that Ethereum implemented it, right? We think of it as it must reside in a smart contract and it doesn't move. It's very rigid, and you know that's the only way to do it. When Avalanche implemented staking, they did it in a slightly different manner. I think the only other feature, and again, I don't know if I'm right about this, but the obvious one that I see is delegating, right? You can natively delegate to someone else's hardware who's already staking the minimum 2000 AVAX. But still, we're thinking of like it rigidly needs to be in. I guess it's not a smart contract in this case, right? It needs to be on the P chain, right? It needs to be transferred right? And locked in that manner. But those are just constructs that we made up for what proof of stake networks need to be. And we have the opportunity to rewrite that. Now, there are going to be native tools that come down from Ava Labs for how, out of the box staking and validator smart contracts that will mirror a lot of what is already done. But these are purpose-built blockchains. You can have your vanilla EVM and build a blockchain for the community you want to build, or you can do what a lot of the biggest, most powerful narratives around L1s are, which is build a purpose-built blockchain. And if you're going to do that, we'd like to start experimenting with all of these tools around how do you create the validator contract to enable custodial level staking. So if Gunzilla launches and a big VC wants to hold 10 million in Gun, that they can stake that in a way that helps the ecosystem. And I think Avalanche is guilty of this more than most other chains, where there's a lot of whales, right? Or I would say a lot of the wealth is concentrated in these large whales who are just putting their asset in and staking it, right? Like, I think it's 65% of all AVAX is staked right now, or some very, very large number. And a lot of that is centralized in whales. And having spoken to some of these whales, like the thought process is, why would I ever do anything risky? Why would I ever take it out of P chain and take smart contract risk, and even like Gogo pools, mini pools, right? They see us as being too risky. And my argument back is always, you're long AVAX because you bought into the narrative of subnets at the time, L1s now, being extremely valuable, which I'm drinking that Kool-Aid too, because I know what these private blockchains at banks have failed to do. So like, I'm with you. I'm very bullish on this, but you need to be able to allocate, and I'm making a connection between staking and putting assets on P chain and putting in a custodian. You're both kind of locking it away and not being able to bring it into these L1s that are launching. So I think the solution, right, to these permissionless L1s that are coming down the pipe are going to be to take custodial locked assets and P chain locked assets and being able to leverage them to create thriving ecosystems within Avalanche, because that's the only way the price of AVAX is going to go up. It's not going to go up just having 65% of all AVAX parked validating C chain. So yeah, I mean, we could talk forever about the products that could be built around that, and how the ecosystem is going to grow over time. But
the integration will take place with Copper, with custodians like Copper, BitGo, Fireblocks, and then the MPC folks that are also the other providers in that ecosystem.
yeah,
And this is something I've spoken with the GoGoBull team for at least a year about, like trying to get you guys integrated with the custodians.
those are hard conversations to have because custodians don't care,
Yeah.
right? I think what it comes down to is
Copper will care though. So the alpha there is Copper will care. So I'll put you in touch with them again, but they're helpful.
I'd love to speak with them.
Yeah.
I think there are other solutions to the problem. Have you followed what Babylon's doing in Bitcoin?
Yeah, we're integrating them. So happy to bring those Babylon validators to Avalanche for whatever you know game you'd like to build.
Yeah, I think their model is great about locking assets in the place they started and being able to transfer the slashability back, like to a chain and then back to that other chain.
Yep.
I mean, at the end of the day, if wrongdoing is ever done on the chain it's being bridged to, or that the slashability is being bridged to, that you're getting paid out in the other asset. And the other asset being Bitcoin is not a problem. There's a lot of liquidity. There's a lot of demand. But I think, as some of these smaller chains come up, it might become difficult. But the point is that Babylon created an elegant solution to give the ability to lose an asset and trade the ability to lose that asset while having the original asset locked. kind of like what EigenLayer is doing with these AVSs, and like trading the slashability on the asset being validated on the Ethereum chain. I think that is for the custodians that just don't want to play and they want to have access to that, to be able to have this slashable command. And to the point I was making earlier, which is these L1s are purpose built. One of the things that can be built in as a like layer that could be deployed, or a product that could be deployed upon instantiation of one of these new L1s, is having this slashability baked in, so that we can service a lot more liquidity coming onto these chains.
Awesome. Well, we're coming up on the hour here. Do you want to leave us with some final thoughts or some call to action?
Well, I told you I couldn't demo today.
Yes.
But we are demoing October 16th at Summit. Steve will be doing a keynote on the builders stage, I believe. So if you're interested in seeing some of the things I kind of leaked a little bit today, and see it live in action, Steve will be there. We'll also be there in person doing live demos. We're doing a demo where we can launch a Fuji testnet for you in 10 seconds. So
Excellent.
Come say hi, bring a wallet, and we will launch a blockchain for you. And
so
we've got some incentives for people who are doing that as well.
Great. We should our go to market over the next little while is we're launching a crackathon to incentivize people to build horrible ideas that are where good ideas go to die. So ideally we could have, I'm in New Zealand where we're surrounded by sheep, so we could have sheep launch an L1 on Fuji.
Yeah. I mean, I could do that for you right now. We can hang up the
Great.
call and do it.
Great.
But
yeah, that's our marketing video right there. That's it.
Yep. I like it. I'm thinking of like a Wallace and Gromit style video of sheep pressing the button.
Yep, that's right, dude. And then we have some chickens that can do it, some goats, cows, and some horses.
Very nice. Yeah. So the call to action: come check out our tech. Come check out our tech. Obviously, we're still doing mini pools, and we'll be talking a little bit in the future about how that grows into being able to service the L1s. I know I didn't touch on that very much today, but it is a core part of how we want to bring that army of validators over.
Right on. Great. All right. Well, Bud, thanks so much for your time today. And we encourage all the listeners and viewers to check out GoGoPool. There have been a friends of ours for a long while now, and they've been fantastic.
Yeah. Thanks for having me today, Nathan.